and welcome to the Expert Exchange. I'm Karina Robertson, and joining me to kick off the new year is Rick Rule, President and CEO of Rule Investment Media. Rick, thank you so much for being here with me.
Thank you, Karina. It's a pleasure and an honor to be on with you.
Well, as always, I look forward to your candid thoughts and insights. Now, in one of our conversations from last year in June, you stated that when I look at the economy, I'm pretty nervous. And that was in reference to the oil and gas prices at the time, and the decrease in energy demand indicating a weaker economy. How do you feel now?
The same. I mean, there are some strong points in the U.S. economy. The continued benefit we get from the tech sector, making people more efficient. But there's problems too. The debt, the deficit, consumer spending rolling over, weakness in foreign trade, likely from tariffs. The thing that concerns me the most, Karina, is, at least in the United States, so many people in the labor force don't have the education and the skill sets necessary to deliver the value to consumers and their employers that would justify incomes that are livable by American standards. This incredible dichotomy in income between the people who have skills and those who don't, and the increasing unaffordability of U.S. lifestyle due to inflation for those people who don't have the skill sets, is troubling economically and becoming troubling politically.
All right. As we move into 2026, where do you believe we are in the capital cycle for commodities and natural resources, and what signals are you watching more closely?
I would ask you to consider that in the sector there's probably two markets, one being the precious metals market. And we are really, truly in a precious metals bull market. The doubling of the gold price, the more than doubling of the silver price, tells us that the game is on. In industrial materials, despite the strength that you've begun to see in the copper price, looking across the spectrum, fertilizer prices, nickel prices, and particularly oil and gas prices, tells me that we haven't really entered the commodity supercycle that so many people talk about. Make no mistake, Karina, we will. We have underinvested in natural resource commodities, things like copper, things like oil, things like gas, for a very long time. And the chickens are coming home to roost. The weakness now, I suspect we talked about in the earlier question. The economy right now is weaker than people think, so global demand has been soft. But global demand can't overcome the challenges to supply that we're going to feel as a consequence of, in the case of copper as an example, 3 decades of underinvestment.
And especially that's especially problematic when you look at the movement towards electrification and whatnot. It's just a constant. You need it, but where is it?
Exactly. Look at your desk. Everything that we do, almost everything that we do, involves copper. Wealthy economies are extremely energy intensive, and that energy transmission requires copper. But if we look beyond you and I, we see around the world, but primarily in the global south, 1 billion people on Earth that have no access to electricity whatsoever. We've done a very good job in the last 40 years making the poorest of the poor merely poor as opposed to desperately poor. And I think that we finished the job of rural electrification worldwide in 20 years. 1 billion new consumers. Copper is required for generation. Copper is required for transmission. And then copper is required for utility. After they get the copper to their houses, they use it in their houses. Spectacular demand for a wonderful cause.
And how do you see this moving forward in terms of let's just pick copper, for example, since we're on that topic. How do we go from what we have to where we need to be? Obviously, it's government intervention to some degree, I suppose, but
I see 3 particular problems. The first, as you suggest, is government. There's an increasing social take, which is to say taxation, off-concession investment, required off-concession investment, and royalties. The increase in copper prices has created an increase in the rapaciousness of the government all around the world, not just third world countries. The second challenge is that you can't undo 3 decades of underinvestment in 5 years. The copper industry itself estimates that to maintain current production for 10 years, they will require between $150 billion and $250 billion. And they say, quite frankly, they don't have the money. So they're going to have to find the money. And they're going to have to find it quickly. Despite that, we won't get there. The third is related to the first. That's regulation. There's a wonderful copper deposit in the United States called Resolution. It's wonderfully located. It's in Arizona, good weather. It's located between two different copper mines. There's a highway through it, a railroad through it, water through it, power through it. It's over 1 billion tons. It's over 1.5% copper, which is 3 times the average mine grade worldwide. It's been in permitting for 28 years. 28 years. Now, I'm not trying to say that we should conduct mining the same way that we did when I was your age. That's not right. But we do need to understand that regulation should be about the export from the mine site of deleterious materials and keep it there. And we aren't doing that. And we're going to have no choice. We're absolutely going to have no choice. Copper is essential to the material well-being of humankind, the political class's preference notwithstanding.
And will AI in some way help speed up some of this? That's
AI could. AI could. There's a whole bunch of applications that I'm pretty excited about around AI, provided that it's employed by people smarter than I. As an example, the simultaneous vetting of 10 different data sets and then superimposing one on another. The ability that AI has to study more data and look for more correlation than any single human mind could make real differences in a whole bunch of topics, metallurgy, processing, but particularly in front-end exploration. We've done a reasonable job in the last 15 years making exploration more efficient. Things like satellite photography, spectral differentiation of large land masses from space, the identifying of macro structures that are too big to actually be seen by the human eye. If you think about AI correlating that information with existing surface information, historical data, stuff like that, the potential impact of AI on the exploration process is very, very impressive. I say potential because we aren't there yet.
All right, well, let's switch to gold. Now, gold was a big story in 2025, currently over 4,400 US an ounce. There are many wishing they had bought in at 2,500 or less US an ounce. What's the gold story in 2026? Does it keep going like it has in the last 2 years?
Like it has in the last 2 years, probably not. A lot of the increase in price that we've seen in the last 2 years is a function of the fact that gold was stupidly underpriced. In other words, it was a coiled spring, and some of the tension's been relaxed. I would argue that the gold narrative has been firmly in place since 2022. It took the market a while to react. But looking further back, I think gold began to do its job in the year 2000, a long time ago. In fact, when people ask me when the gold bull market began, I say 25 years ago. The gold prices increased by 9% compounded for 25 years. Gold has done its job. Is the gold price going to double next year? I mean, it could, but I don't think so. Those of us who were in the gold trade early should be thankful for last year, but we should expect a more muted performance, particularly in the near term going forward.
Right. And so much of what people were saying with gold is just that it's, obviously with all the geopolitical concerns and all the problems that we're having on that front, that's also what helped to, make it a safe haven, investment for all this that continues to go on. If we still see, the continued issues geopolitically, even just what we just, saw at the start of the year with Venezuela, do those types of things continue to impact the price of gold?
That's to me a more minor concern, frankly. What's the major concern to me is the real deterioration in the purchasing power of conventional savings instruments in fiat currencies. If you believe the U.S. government, the inflation rate in the U.S. is 2.9%, which is ludicrous. It's absolutely ludicrous. Those guys don't shop where you shop, Karina. Look at in the time period 2020 to 2025, the price of gasoline, or in the United States, health insurance, or in Vancouver, rents despite rent control, or housing costs. And the stupidest thing, probably, about the CPI is it doesn't include tax. I guess if I didn't have to pay the tax, I wouldn't bitch about the index. But the truth is, not including tax in my cost of living, my largest single expense, is pretty fallacious. I think that the deterioration of the US dollar, and by the way, the Canadian dollar too, is proceeding along at about 8% compounded. Here's why gold works. If you buy a US 10-year treasury, it pays you 4.2 in a currency where your purchasing power is declining by 8% compounded. When you look at the US budget deficit and the aggregate US debt, and I say US parenthetically, that includes Canada, you have a different range of problems. The ability that the government is going to have to meet their obligations to bondholders, but much more particularly to entitlement holders, that's old folks like me, means that they are absolutely positively going to have to inflate away the net present value of their obligations. They have no choice. We did this in the 1970s. You'll have to take it from me. You weren't there. But in the 1970s in the U.S., according to the U.S. Congressional Budget Office, the purchasing power of the U.S. dollar fell by 75%. So imagine the impact of a pensioner who lives on a fixed income that has fairly limited savings when it takes $4,000 to buy $1,000 worth of goods and services. Those are challenges. And those are the challenges that gold has addressed for 1,000 years.
Well, at this point, I was going to segue to silver, but I feel like I'd rather chat about the battle bank at this point. Just because it's just, it just seems like it's set up in order to, for the people, for those that want to kind of hold on to their money or make the most of their money. So, tell me where battle bank is right now, and is poised for 2026.
Well, I needed to start by saying people know me from the resource business, but I've been involved in the banking business for 40 years across 7 banks that I was an important participant in. So I'm not a Johnny-come-lately to the banking industry. The management of Battle Bank started our predecessor bank called Everbank 25 years ago. We grew that institution from $0 to $28 billion before we sold it. So we've done this before. Why is Battle Bank different? Several reasons. We don't have branches. Our bank is set up for people who use their computer and their phone as their branch. Doing that saves us 1.5% in non-operating expenses a year, a saving that we can pass on to our savers, our depositors, and our shareholders. We are operationally more efficient. The second thing is that we offer better products and services. Most banks in North America and Canada don't pay their savers for deposits that are in checking accounts. If you're interested in interest, we do. That's a huge advantage right there. And we don't have 15 or 16 savings products designed to confuse our customers. We have one, a high yield account that you can write checks against or wire from or set up automatic bill pay, whatever you want. We do that. The second thing is our IRA product. You would call them in Canada RRSPs. We don't offer RRSPs, just IRAs. But what's different is that our IRAs allow you to run your own IRA. Most retirement products in the United States are designed as receptacles for annuities and mutual funds and, products from the financial services elite. With our product, if you want to own a duplex, which you operate, or a triplex, or an Airbnb, if you want to buy a Subway franchise that you operate, you can do it. Any legal business you can carry on in an IRA with Battle Bank. Also on the deposit side, most American banks give you a choice of currencies to invest in. It could be the U.S. dollar or the U.S. dollar or the U.S. dollar. At Battle Bank, we give you a choice of 20 currencies to save in. Let's say that you're an American who does business in the U.S. and you need to save and bank in both currencies. Battle Bank, no problem. RBC, we can do it for $10 million minimum. Big, 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 big difference. And then finally, on the lending side, most banks in North America, in fact, all banks in North America, don't believe that gold and silver are good collateral. I've been in this business for 40 years. I know that they're good collateral, and I know that the people who save in gold and silver are prudent people, good people to lend to. So you can use your stack, however you call it, and access credit, whether or not you borrow against it, so that you know that you have it when you need it. secured by your physical gold, silver, or platinum and palladium. Again, you can do this with RBC or HSBC. The problem is a $10 million minimum.
Right.
Shadow Bank, the minimum is $100,000.
Just sort of equalizing the playing field a little bit. Well, now I can segue back into silver because that's you use gold and silver as collateral. So let's just talk about silver and your opinion, on the silver sequel right now to the gold story.
We talked, I think maybe the first interview you and I did about the relationship of gold and silver in a bull market. And we talked about the fact that when the generalist investor comes in the precious metal space, attracted originally by the momentum in gold, that leadership changes from gold to silver. I kind of reckon that's happened in the last 3 months. The gold has done well and silver's been explosive. I've seen that 3 times before in my life. And that's the signal that the game is on in earnest. I don't expect in 2026 that the silver price will generate as much momentum as the gold, as it did in 2025. But I do expect over 10 years, both metals to go higher. Specifically, I believe that gold will maintain its actual purchasing power. When I say that, you'll recall that I said that the dollar would lose 75% of its purchasing power. That means the gold price would need to go up threefold in order for it to maintain its purchasing power. Suppose it's only twofold. My experience has been in precious metals bull markets that silver outpaces gold once the generalist investor comes in the space. So I'm 10 years positive on silver. I'm not so sure I'm 1 year positive on silver. And I need to say for myself, Karina, so that people understand perfectly, I have a fair bit of physical silver that I bought 3-4 years ago because silver was hated. I bought it because I figured the price would go up when the hate left. That's happened. For me personally, with my speculative portfolio, and I consider silver a speculation, not an investment, when the reason I own something occurs, if I've been paid, I get paid, I sell it. And so I haven't yet, but I'm going to sell most of the physical silver, not all, but most of the physical silver that I bought in anticipation of it being less hated. And rather than speculate in silver itself, I will continue to speculate in high quality silver stocks, which I think go much higher.
All right. Now, about 6 months ago, you mentioned that you were investigating rare earths more closely, and just curious to know what you've uncovered since.
A lot. They're not rare, first of all. We haven't found them because we haven't looked for them. And we haven't looked for them because the Chinese produce them too efficiently. There's 2 things that are changing. The first is that the Chinese have decided, perhaps, to weaponize rare earths, to constrain the supply of elements that are critical to everything on your desk. And that has caused people outside China, not just the U.S., but Japan, the European Union, the UAE, to understand the geopolitical importance of having rare earths for themselves. The other thing that's happened is that the very low prices of Chinese rare earths are a consequence of incredible environmental degradation caused by Chinese mining practices. And the Chinese citizenry and the Chinese government aren't tolerating these practices anymore. So the efficiency with which the Chinese produce these materials is going away. When Chinese costs increase, it lifts the floor price of rare earths. Now, I need to say, 2025, I only own 2 rare earth stocks, and they performed miraculously well. Neither of them generate any revenue yet. Looking at 80 or 90 exploration development stories in the rare earths, these were the 2 that made sense to me. But I need to say I've already been rewarded. I guess the third fly in the ointment with rare earths, which I guess is bullish, is governments have decided it's a good thing. I say mixed blessing because in my 73 years on Earth, I've never seen the government make a good investment decision, and I'm concerned about that. But our government, at least, has decided, rather than vilifying me, which they would have 5 years ago, to subsidize me. Since they take money out of my right front pocket, provided that they want to put some back into my left front pocket, I'm probably willing to take it. And that's the circumstance that we see in rare earths. Direct subsidies, and also the subsidized construction of processing facilities, which is going on at a mad, mad, mad rate. My my caution to your viewers is to understand that of the 80 or 90 companies that have suddenly entered the rare earth space, most of them are run by people who 4 years ago couldn't spell rare earths. They flunked out of the pot business. They flunked out of the gold business. They probably flunked out of the lithium business, and they're going to flunk out of the rare earth business. You have to be extremely picky in that space. It's difficult to get up the learning curve because most of the so-called experts aren't. So buyer beware.
Does any sector stand out for you?
The best sector I see is oil and gas. I told you before, I love hate, and I do. And oil and gas are hated. The public narrative around oil and gas seems to be generated by that noted energy physicist, Greta Thunberg. And I don't think she's much of an investment analyst, personally. So I suspect if I had to pick one sector, well, let's put it differently. If I looked at a sector where I'm deploying most of the new capital I'm deploying, it's in oil and gas. I particularly like the Canadian oil and gas sector because it is as cheap as the U.S. sector is. The Canadian sector is cheap. And it is of at least the same quality with regards to the human resources. There is no diminution in management skills going south of the border, despite Canada's much smaller population. The Calgary community is a very high-quality technical community. The risk in Canada for the Canadian oil and gas business is in Ottawa. The Laurentian elites don't like oil and gas.
All right. And are there any companies in particular that you feel are
There's a lot to like in the space. There's so much that I don't have to come down to small companies. I'm in the mid caps. So I own Canadian Natural Resources because it's in every possible play. You know, I can cover the whole waterfront with one company. It also has adult supervision. It was started by a guy named Murray Edwards. It's run by a guy named Murray Edwards. That's useful. You know, the corporate culture, as expressed by one person, is still intact. I own a bit of Suncor. I'm wondering about that, but I'm still comfortable with Suncor. But I own a basket of stocks beneath that includes Prairie Sky, Freehold Royalty, ARC, Tourmaline, Peyto, and Birchcliff.
Okay.
I've tried to cover, the efficient companies in every play type in Canada.
It's almost like your own little ETF.
Very specific ETF. Yeah, it wasn't chosen by market cap or liquidity.
No.
It was chosen by quality of earnings and growth pipeline. But yes.
All right. Well, thank you so much for your time, especially as we start this new year. And we look forward to speaking with you again. Rick, thank you so much.
Thank you. I hope to see you at Metal Investors Forum and Vancouver Resource Investment Conference and Courtier, and the Vancouver conference season is upon us.
Right, and you have your conference as well. That's midway through the year. So if investors are looking now to plan for that, maybe do you have the date?
July 6th through 7 in Boca Raton, Florida. I will unhumbly say that my conference is the finest natural resource investment symposium on the planet, and I can prove it to you. If you come and you don't think you got your money's worth, I'll give you your money back. Nobody else does that.
Nope.
Absolute money back guarantee.
That's it. That's a great offer. And it's now, so got lots of time to plan.
Correct.
All right. Well, we'll speak again. Thank you so much.
Thank you, ma'am.